Market Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets editor John Dobis. Great economic news out of the People's Republic of China today. The PMI, the Purchasing Managers Index, last month was up to 53.1 versus 51 the prior month. Anything above 50 is considered an expansion, which is good news for China, where a lot of people were worried about a hard landing in that country, which would derail the entire world economy and commodity markets and things like that. But with this new reading, the fourth straight month of growth, may I add, a lot of those fears are allayed. Also here in the U.S., the Institute for Supply Management, March ISM 53.4 versus 52.4 in February. So the U.S. has an expanding manufacturing base as well. So that gave a lot of credence to the idea that the economy is still rolling and stocks went higher. S&P 500 index was up about 0.62%, not a whole heck of a lot, but look at the gains it's made in just the past 5 months. Here we are at a 4-year high at 1417-ish. This is the SPY, which tracks the S&P 500 index. China, the FXI, it's in rally mode, but still not quite where we are in the S&P 500. Nowhere near 1-year highs. And in fact, it's down a little bit from where it was earlier this year. But the FXI, you've seen a nice little uptrend since October. Hopefully with this, if you're a China bull anyway, hopefully, with this economic news, maybe we'll see the FXI turn around. But it needs to turn around quick because it's below the 200-day moving average, which is kind of the demarcation point between bull and bear markets. You want to see it above the 200-day average. Taking a look at some world markets and some U.S. asset classes for the first quarter of 2012, it was Deutschland, über alles. The iShares Germany index up 21.12%. That's the EWG. Here we have the S&P 500 right here, along with the Russell 2000. They were both up about 12.6 for the Russell, 12.6 for the S&P 500. What you want to see, this is kind of a red flag here, what you want to see are small stocks outperforming larger stocks as an indication that people are willing to take more risks, get crazy with their money and put it into stocks. So, yeah, while hardly, something that's going to sink the ship here, something to pay attention to. You want to see the small stocks in the Russell rally a little bit more. China only up 5% in the first quarter of 2012. Here's the emerging markets index. Takes Brazil, Russia, India, China up 13%. Not much more than the U.S. And gold 6.66%. Devilishly low returns for gold, which has been up for 11 years in a row. Check out the EWG here. This is the Germany iShares. You can buy this at any E-Trade, Scottrade, all those guys. It gives you a little slice of the entire German economy, riding its 10-day average higher, looking like a pretty nice chart there in recovery mode, above the 200-day, not quite at 1-year highs like we are here. Well, it had to happen eventually, didn't it? An analyst came out with a price target for Apple above $1,000. Well, this gentleman named Brian White at Topeka Capital Markets did it, just by $1 over 1,000. He's all fired up. Wanted to be the first guy to say it too, of course. There's, you want to get a headline, and he did. Have you heard of Topeka Capital Markets before? 4G LTE he's fired up about, China growth, and ITV. So he thinks he's got a $1,001 stock, which would value Apple just below $1 trillion in market cap. 15 Apples would pay off our national debt. Apple, you can see the stock here. It's gone vertical since, around Christmas time, up to $618.63. That's a new high, folks. So Apple still going vertical. And when these stocks, remember back in 2000, or if you weren't around then, every day it was like, what? It went up that much? So Apple finally up here in the stratosphere. You think it is, but it could have a lot more to go before it finally turns around. Look at these sectors, though. Apple, of course, is in the technology sector, which was pretty close to technology for among the best in the first quarter of 2012. Utilities, the single loser, down by 1.21%, but financials and technology are the way to go. And look at this, the XLK. This is an ETF that tracks all of the technology sector. Apple, of course, is the biggest component of it because it's the biggest market capitalization, and it's got a similar chart to Apple right here. Some other stuff, though, in here that's doing well. You might want to check out as an individual stock, IBM. Big Blue. It's hitting new highs. Look at this, $209.47. This is a stock that was down below 180 just before, actually in January. So Big Blue on a roll. Got some good momentum there. Apple, $1,001. Don't hold your breath, but it probably will get there eventually.